Hello, I'm Juliet Sarli. In this week's edition of IG Macro Intelligence, we take a deep dive into the record high gold price and Australian gold stocks to watch. The price of gold has soared above $3,000 per ounce for the first time in history. The rise in the price of the precious metal has been fueled by global economic uncertainty, a surge in central bank purchases, and US President Trump's efforts to reshape global trade through tariffs on both allies and strategic rivals. Gold is seen as a safe haven in times of uncertainty, with previous psychological benchmarks reached during both the global financial crisis, when gold breached $1,000 an ounce, and the COVID-19 pandemic, when the metal broke through the $2,000 an ounce barrier. However, as this Bloomberg chart shows, when adjusted for inflation, gold is still a long way from its peak set in 1980, when it hit the equivalent of $3,800 adjusted to today's prices. Analysts, though, now scrambling to readjust their current gold forecasts after the breakthrough came faster than expected. Bank of America gold strategists have suggested investment demand would need to increase by a further 10% for gold to reach $3,500 an ounce, a level they have labelled, quote, not impossible. And Fairmont Equities' Michael Gable agrees.
Looking at gold in the past year or two, it looks like it's gone a long way, and numbers like 3,000 feel like that. It's achieved a lot. Maybe it's time to start selling. There are some even more bullish targets closer to sort of 3,500 for gold. But if you zoom out and look at the monthly chart, for those that follow technicals, you'll realize that the recent move it's still early days. So because it's taken so long for gold to break through that blue line, it'd be highly unusual for the move to only last 1 year after it's spent so many years waiting to break through that sort of 2,000 region. So look, I think the rally in gold is much further to go.
M&A activity in the gold sector has been heating up in the past couple of years after global player Newmont acquired Australia's Newcrest Mining in a deal worth more than $26 billion back in 2023. Newmont CDIs are listed on the ASX under the code NEM and have risen almost 23% since the acquisition. This week, Ramelius Resources announced it will buy developer Spartan Resources in a deal valuing the smaller player at $2.4 billion. Shares in Spartan soared following the announcement and are up around 200% over the past 12 months. Gold miners are seeking more supply amid soaring prices of the physical gold, suggesting further consolidation in the sector ahead.
Certainly there is a big influencing factor of the geopolitical uncertainty that's going on, and then you add, no one really knows what Trump's going to say every single day and what side of the bed he wakes up on, and that creates even more fuel for activity.
Well, when it comes to the world's largest gold miner, analysts are pretty bullish on the outlook for the Australian listed shares. Ord Minnett recently upgraded Newmont to a buy from Accumulate with a price target of $92.50, suggesting the stock can rally a further 27%. Ord Minnett has named Newmont its preferred gold stock, along with Capricorn Metals and West African Resources. Shares have risen around 44% over the past 12 months, with around half those gains coming in the first few months of 2025. Ord Minnett is not alone in its positive outlook for West African Resources, with all 4 brokers surveyed by Refinitiv suggesting the stock is a buy, with the average price target at $3.08, implying it can rally nearly another 40% from where it is now. The outlook for Evolution Mining shares a little bit less optimistic, most brokers suggesting you hold at the current levels. Citi, though, does prefer Evolution to Northern Star. The broker has a neutral recommendation on Northern Star, expecting Evolution to keep outperforming the stock given its higher exposure to spot gold and the premium attached to Evolution's copper exposure. And finally, when it comes to Ramelius, all analysts seem in agreement about its longer-term potential given the Spartan acquisition.
I think, as the market starts to soften and people start to see, well, where is the revenue potential, that they'll actually start to recognise that some of these producers are generating a lot of money. They're reasonably low risk in that they have very strong balance sheets. And there'll be a realisation that there is better value in the gold sector than in other parts of the market.
And that is your IG Macro Intelligence for this week. We'll see you next week.